We are live from Silicon Valley in the San Francisco Bay Area. Philip Ma here with Exp Realty, and I am joined by Jonathan Wyant from BMO Home Mortgage.
Good afternoon, everybody.
Hey, Happy New Year to you,
Happy
Jonathan.
New Year. Happy 2024.
Can't believe it. Time really flies. All right. What we wanted to do today is to provide you with a market update for January. We're going to kind of give you an update on where mortgage rates stand. Then I'm going to walk everybody through the latest market data for Santa Clara County and San Mateo County. Then we're going to cover a couple case studies of active listings on the market right now. They're both in San Mateo County, and we're going to kind of do some hypothetical numbers. Jonathan has some scenarios on different loan terms that could be used to purchase these houses. And then finally, and that's pretty much what we wanted to cover today. It's really kind of focused on what can someone afford right now in this market, in this current environment. How much house can someone buy? Finally, we want to end by doing a drawing for this cool restaurant that Jonathan and I we tried it a couple months ago. It's called Shiok Singapore Kitchen.
Delicious.
In downtown Menlo Park.
Highly recommended.
Pretty good food. What do you think?
Yeah, definitely.
Yeah, it was nice atmosphere, just kind of casual dining, but right in downtown Menlo Park. So we'll talk a little bit about that at the end. And then for anyone who's attending live, if you enter your email address and your number, we will enter you into this drawing for a $25 gift certificate, and we'll kind of remind people as we go during the course of this session.
Sounds good, Philip.
All right. I'm going to let you cover the mortgage rate update, Jonathan.
All right, here we go. So heading into the new year, mortgage rates remain on a downward trend. This graph is a week-by-week graph. As you can see, the last 3 weeks have been really generous to the interest rates. And if we look back on this blue high, the high points, the highest one there, 7.79%, that was in the middle of October. And keep in mind that the Fed has not reduced interest rates yet. So this is just what the 10-year bond yields are showing, and the fact that the inflation is coming down. The investors are seeing, and they know that the Fed is going to be lowering interest rates this year on a steady basis, maybe 0.75% to 1% this year, and another 0.75% to another percent or so next year. Is our best hypothesis. So this the downward increase is going to be remaining steady for the next couple of years.
Yeah, and I think this shows that there's enough data to really show a downward trend in mortgage rates. As we've seen, when mortgage rates start to come down, people can afford more house.
Definitely. Yeah, for any of those people who bought over this last year, it's probably a good time to check in with your mortgage banker and see if you can refinance that. And for people who have been on the fence and looking to buy, call Philip. We can run some numbers and get you looking.
All right, let's take a look at this next slide here.
All right, so this is January's rates, down and up a little bit. These are small basis points, ups and downs, normal activity for what we're seeing there in January. And as you can see over the next 3 quarters, that was January 19 to today. So yeah, we can definitely see a low point there. That was COVID, most definitely. And they've increased since then. The Fed really had to lower interest rates to keep people comfortable while they were stuck in home, and they wanted to. They couldn't buy anywhere, they couldn't go anywhere, so they just stayed at home and they did home chores. the whole time. They bought pergolas, they bought sheds, they, all these consumer goods, and the low interest rates really help people that had equity in their homes to take out some of that money, refinance their mortgage, and improve their property. So if they're going to be stuck at home, or when they are at home, now they're able to enjoy it that much more. But with anything, there is we've been healed from that time frame, financially speaking, and so the interest rates naturally had to come back up. So this was the flip side of that, and now it's finally coming back down. As you can see here, over the next 4 quarters, this orange graph. We're seeing interest rates go from the 7.5, which they were in like October, November time, down to the 7.1, 6.6, and 6.3. So, over the next 3-4 quarters, we're going to see probably a good percent drop in the interest rate. So it's a good opportunity for a lot of people who are looking to buy or want to buy a bigger place.
Right, right. And as interest rates come down, I think it will affect demand in Silicon Valley. I'm already seeing demand picking up quite a bit.
Mhm.
Since the first of the year, I've been talking to some buyers, and they wanted to see a couple properties that were listed on the market. I called the listing agents. One of these properties was on the market for like 7 days, and she
Mhm.
said, "No more showings. We're going sale pending today. We are gotten multiple offers." The same thing happened to me this morning. I talked to the listing agent. That one wasn't even vacant or ready to show, but she said, "We got an offer," and they decided to accept it. So I just see buyer demand really picking up
Yeah,
with as
the
rates come
inventory.
down.
Definitely. The inventory, available inventory in the Bay Area is always, right around 1% or less, and everyone's got to live somewhere. And so there's a lot of good incomes in the Bay Area. People have their ducks in order. They have their good credit scores, the good assets, the good incomes. And so they're going to be in the running for these properties. And, once those rates come back down, and more people start to put their inventory on the market, because there's been a shortage. There's always a shortage for the most part in the Bay Area, but we're actually anticipating about 3 times or so as many home buyers coming in on the market when it comes summertime. 3 times as many as the estimated new inventory. So that means that there's going to be more people fighting over these new properties, which is just going to push those properties, the property values up even further. So our big recommendation is anyone out there who's on the fence, if you're really serious about buying, sooner rather than later is going to be beneficial for your pocketbook. And I know rates are high right now as we're looking here, 7.5%. Those are for 30-year fixed rates. If we go with something like a 7-year adjustable, that's the lowest rate we have available right now. We're actually down to about 6.25 today. So huge difference it can mean from a 30-year fix. So if you buy now, you're going to have a high interest rate for a little bit, but as you can see here, those rates are going to come back down, and you'll be able to refinance maybe every 4 to 6 months. Save a few $100s in your pocket every time you do it. No closing costs. That's the recommendation. That's what we're seeing.
Okay, cool. And I think we're going to see that even clearer when we get into these case studies and run through some of these scenarios.
Absolutely.
Let me move on to our market statistics for Santa Clara County and San Mateo County through December. You could see that the median sales price for single family homes at the end of December was at around 1.7 million in both Santa Clara and San Mateo County. There wasn't much movement from November to December, and it's seasonally, it's probably the slowest time of the year. So you can see that days on market did increase a bit in both counties, up to 32 days on market in San Mateo County. The sales to list price ratio was still over 100%. So on average, people were offering above the asking price on transactions that happened that month. Now, in terms of sales volume and listings, those declined month over month in both counties. And if you look at the months of inventory, we were down to now 1 month of inventory in Santa Clara County and about 1 month in San Mateo County. That's really low. And again, some of that may have to do with seasonality. Not a lot of people are listing their home for sale in November, December. However, that's even lower than a year ago, December of 2022, when it was about 1.6, 1.5 months. So we're at really low levels of inventory right now. And that just means, I think it's because those rates, as we saw, they started to come down in mid-October and they steadily came down through December. And if they continue to decline, it's going to be pretty tight supply. Now, one article that I saw, or one quote that I saw from an economist, this was actually Lawrence Yun, the chief economist of National Association of Realtors. He was saying that as these rates come down, there will be more sellers that are willing to list their home for sale. They have been sort of sitting on their really low mortgage rate that they got 3 years ago, but they may be more willing to move as these rates come down. So hopefully that will open up some supply as well.
Yeah, those buyers have to go to somewhere, and a lot of times they're going to take on a new mortgage, and looking at 7.5% for 30 years is kind of an eyesore.
Yeah, right. All right. Now, here comes the fun part. Let's take a look at a couple of active listings. This first one is a single family home in San Mateo, and it's only been on the market for about 5 days. It's a 3-bedroom, 2-bath home, 1,664 square feet, built in 1954. It's in the Parkside neighborhood, which is really close to the water. You can be at the bay, Mariners Point, in minutes from this house. And another thing about this area is the public schools are really highly ranked, really strong. The house itself has been newly remodeled. It's got nice upgrades to the finishes, the kitchen countertops, the flooring. It's got a really modern look, as you can see from this picture. And so it's ready to move in. The list price is at 1.398, so just below 4 million. And if you recall, the median price for San Mateo County was at about 1.7 million. So this is below the median sale price, and it's going to go fast. I'm telling you, it's going to go fast. I've already communicated with the listing agent on this one, and they got so much traffic at open houses last weekend. This is where a lot of the demand is. It's right a little bit below or at the median home sale price. And so it's going to be competitive. Now let's take a look at financing scenarios would be. And you've got a couple scenarios here, Jonathan.
Yeah, we've got a couple scenarios. So one is for 10% down for people who want to keep some of that money for further upgrades, or any kind of just the financial needs in their life. They can put 10% down. There's a no PMI, which is a private mortgage insurance. Generally, if you put less than 20% down on a primary home that you're going to live in, there's private mortgage insurance. It insures the borrower. Actually, it insures the bank against the borrower defaulting. So this is a generous one. There's no PMI. The rate is a little bit higher, but dollar for dollar, it's a better deal than having to pay that PMI on the side. It could be something like $500, $600 or something like this. So and here I put the purchase price 1.38. I must not have seen the 888 behind that. So let's just assume it's a 1.398. Down payment is going to be $139,800. Not bad to get into a home. And like I said, those values are going to be creeping up over the next couple of years. You'd be surprised how quickly that 10% could turn into 20%, and the ability to refinance along with the rates coming back down. It's just going to be a staggering opportunity for people. So
Right.
with a loan amount of 1.2 58200, principal and interest is $8,056. Property taxes in California somewhere between 1.2 and 1.25. We use 1.25 in the banks to be conservative, and you might look at your property tax bill and it'll say something like 1.23846. Long number. Has to do with the bills in that area and what needs to be, what libraries are nearby and stuff like that that the property taxes are paying for. So that comes in at $1,456 a month. You'll get some tax deductibility on that. You'll get some tax deductibility also on the first $750,000 worth of that loan. Used to be $1 million, but now it's $750,000. Insurance, we're estimating at about $150. You might be able to get a policy if you shop around, maybe get $100, $125. So we're just kind of throwing that in as an estimate. Total monthly payment, $9,662. Now, Philip asked me earlier, what sort of an income level is required to buy something like this? And rule of thumb, you want to have at least twice the monthly payment, plus all of your other credit cards, car loans, student loans, in income per month. So let's just assume that the hypothetical buyer in this case doesn't have any of those other things. They pay off their credit cards. There's no car loans. There's no student loans. They just have this new property and the payments, the PITI, principal, interest, taxes, and insurance. 9662. So they want to be making about 20,000 a month. And for maybe a family of two, husband and wife, hypothetically, if each is making $10,000 a month, they'll be able to qualify for a place like this. And the rate on this, by the way, is 6.625%. Much better than the 7.5 30-year fix that we were looking at not too long ago. Not a lot of people, I don't think, but besides the rare cases this last year, I haven't actually locked any 30-year fixed loans for anyone because the rates are so high. Everyone sort of knows and believes in the interest rate cycle, and as a lot of the big wigs are telling us, those rates are going to be coming back down. So we go with a short-term 7-year. We do have a 3-year and a 5-year, but those rates are higher, so we'd rather give you more time just in case. And most people going into a 7-year right now, like I said before, you'll probably be refinancing in 6 months. The Fed is anticipated to start lowering interest rates sometime in March, April. And when they do this, it's just the same thing when they increase the rates. They do it 0.25% at a time. So that's not a bad rate for right now. Now, if we look at the bottom column or row, this is 20% down. As you can see, the rate's 6.375%. So if you do have that extra money, it's going to reward you with a lower interest rate and then also a monthly payment on the back end. Purchase price, the same. Down payment is just twice as much as the top one. Loan amount's just 1.118400. Principal and interest on this, $6,997. Property taxes and insurance are the same. So monthly payment, $8,603. So a good, 1,300 and what is that? That's 1,050 or so reduction in the monthly payment. Not bad for those who, want to make sure that they've got enough money at the end of every month to contribute to the 401ks, to take vacations. We definitely need that here in the Bay Area. We work so hard. So those are the two scenarios. This is a very common scenario, actually, this price point. Anything, maybe above 1.1, all the way to the 2s and 3 millions. This is a very similar setup that we can do. 10% and 20% down, and you can even do it right in the middle. 15% down might give you a slightly lower interest rate than this 10% down, but we're still going to need to build in that PMI since it's less than 20% in the scenario.
Yeah, and if I look at the difference in the monthly payment between these two scenarios, it's about a little over $1,000 a month. if 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 I went with the 10% down, I'd be paying like $1,060 more a month. However, at 20% down, I have to come up with that extra 139,800 in
Mhm,
down payment.
mhm.
It kind of feels like 10% down is more manageable.
Definitely more manageable, and I do actually have a lot of clients that have the 20% down, but they opt for the 10% because they wanna keep that other 10% out, for emergencies, for plans that they have coming up with their family. They wanna buy that, the RV or the boat or whatnot, and so they see the benefit in leveraging, these terms. And I also didn't, include in here, so for those people that do have the extra 10% down, or more, there are relationship discounts that BMO offers for people that have relationship assets with us. There's 5 tiers, and you get an eighth off every time. An eighth is 0.125 of the rate. So for those people that maybe have 100,000 with us, they can keep it for 6 months or so. That'll be that'll take that 6.625 down to 6.5, and now we're super close to the rate of the 20% down. So yeah, so it goes 100,000, you get an eighth, a quarter million, you get another 500,000, 750, and a million. So for people that have investments or maybe business accounts, we can count both personal and business accounts and investments, Roth IRAs, old 401ks we can move over and invest into traditional IRAs and things like that. So there's a lot of opportunity here to benefit from even lower rates than we publicly publish.
All right, go BMO.
Go BMO.
Yeah, open up that BMO account. Get those discounted rates. All right, here's the second case study. This is a single family home in the city of Brisbane, and it's a 2-bedroom, 1 bath, 900 square foot home. It is in kind of near the downtown area of Brisbane, very walkable neighborhood. You can be in the kind of the commercial district by just a few minute walk. This is also recently remodeled. In fact, they're just putting the finishing touches on the remodeling, so they don't have a lot of pictures in the listing yet. And the list price is just under $1 million. So Jonathan and I thought, hey, why don't we, instead of just looking at it from the angle of this being a primary residence, maybe this could be an attractive investment property for someone who wants to get a rental property and build up equity that way. So what we did, or what Jonathan did, was he took a look at a scenario where this would be someone buying it as an investment property.
Yeah, and for investment properties, we require a little bit more down payment, and that helps the client also with rate and getting that monthly payment down because cash flow is a huge part about buying an investment property. And as you can see here, 25% down, 7-year ARM. The interest rates are going to be higher on investment properties, but again, those will steadily come back down. Um, or for some people, let's say they have a $2 million property, it's paid off in full. They can always take cash out of their primary residence at primary residence rate, buy the investment property, and as long as they can show that that money went to the investment property, all of that money showing on their primary residence becomes um, tax deductible on the rental. So there's creative ways to really save money in these situations. But going forward here, so purchase price 998, down payment just under $250,000. The loan amount here, take note, is 748,500. This is just below the conforming limit right now that raised up this year to 766,500. Now, if this property goes above listing to maybe 1,050 or something like that, 25% down may push that loan amount up above 766,500. That's going to put people into what's called a high balance conforming category. And for places like the Bay Area, we do have that high balance conforming, so we can still offer loans to people, but they're just a little bit more expensive, generally speaking. But the nice thing is that BMO has a program. If you have just $50,000 in assets with us, we can price that loan as what we call a jumbo loan. Jumbo loans are generally anything like I think $2 million right now or more. So think of the Costco wholesale deal. Like the more you borrow, the cheaper it is. You can even get this higher loan amount, benefit from a lower interest rate, which could be 1/4% or 3/8 lower, and then just pay it down to whatever you want to, right? Sort of play the game a little bit. So this is something that we do for our clients. But in this case, I only gave one scenario because this is a conforming loan. There's no way to price it as high conforming, which we don't want anyhow, and there's no way to price it as jumbo. Those are the three categories. So on this one, at 7.375, that principal and interest loan payment is 51.69 per month. Again, property taxes at 1.25% per year. We're estimating 1,039 there. Insurance is 150. So the total payment comes in at 6,358. And when we break this down, there's going to be probably 1,800 to $2,000 maybe of this money, of the principal and interest that's going to principal. That's not really a cost. It's just going from someone's cash to their equity right away. So that's nothing that you can write off. It's just money in the bank, in the equity bank, if you will. And then again, you're going to have the ability to write off the interest in full on this loan. I know it's below 750. That's a rule for primary residences. The nice thing, if you buy an investment property, it doesn't matter how high the loan amount is. The whole thing is considered a business expense as a rental. All that interest is tax deductible. So is all the property taxes, all the insurance, and any other upgrades or repairs that need to be made in the property. So if we just look at the removing the principal and getting that taxes or the tax benefits that you get from this, the monthly payment, really, the actual cost of this loan may only be something like $4,000. And Philip, how much did you say that they might be able to get for rent on a property like this?
Yeah, so given the location, I think the location is good for a rental because it's a very walkable area and it's very accessible to Highway 101. So if someone's working up in San Francisco, they can easily get up into the city. If they're working down on the peninsula, they can be down on the peninsula pretty quickly. I haven't looked at the rent figures. I would think maybe they could get 4,000 a month as a long-term rental
Hmm.
and maybe even more as a medium or short-term rental.
Hmm.
So that's always a possibility in the future. I have myself some Airbnb properties where I'm getting quite a bit more in monthly income, but it's a little bit more up and down depending on seasonality.
Hmm.
So it depends on what time of the year it is, but I think over the long haul, the short or medium term rental is going to give you a higher rental income. Maybe it gets up close to that 63.58 payment that you're making every month.
Oh, wonderful. That's so worst case scenario, you're saying that with a long-term easy rental, right? $4,000 with that calculation, we should be cash flow breaking even every month. And when these people buy this house and refinance and refinance and refinance, and they're paying down their loan, it's going to help them be cash flow positive in no time.
Right. Yeah. And then, as you said, the principal pay down is building up the equity that you have in the house. And then, as we know, the Bay Area, it tends to appreciate over time. So you're getting more equity just by holding it over time.
Definitely. And did you say that so Brisbane, I know it's just outside of San Francisco, so if maybe there's some vacation people, they don't want to be in San Francisco, but they want to be close, you think an
Right.
Airbnb would be a good angle in this area?
I think so. It's very convenient to get into San Francisco. It's very close to the airport. So if you're coming in, let's say you have a business trip, it's close to the whole biotech um, area there with all the big biotech companies. So tourism or business, I think it could be a well-positioned investment property.
All right.
All
Sounds like
right.
a good deal. I'll take it.
So yeah, let me know if anyone is interested in touring this property. It's not yet available to see, but it should be very soon. And again, with all of the buyer activity that I'm seeing just since the New Year's Day, I think this one is also going to go pretty quickly. But if you reach out to me and Jonathan can get you quickly pre-approved for a
Mhm.
loan, and then we can go in with a strong offer and get you that property.
Absolutely.
All right. So as next steps, here's our contact info. I also have some home buying guides, home selling guides. If you're looking to list your home for sale, I have a very good home seller's guide for winter of 2023, 2024. You can go to the link you see here. I'm going to also have it in the description below this video on YouTube, and you can download that guide. Um, and feel free to reach out to Jonathan for any questions, to get a rate quote, and to get pre-approved. We have to get you pre-approved in order to be
Yep.
able to take action quickly on an opportunity.
Absolutely, and we can do what's called a just kind of a pre-qualification. If you're curious to see how much home you can buy, if you got a simple situation, you have a more complicated situation. I'm very used to having these conversations. We don't need to pull credit. I can send you an estimate on what we talked about via email. I can send you the application instructions so you can talk about it with the family and see what next steps you want to do. And then when you're ready to start placing offers, we can convert your application into a pre-approval, pull the credit, look at income, look at assets. All that's a necessary step to be able to go and visit properties right now, right, Philip?
Exactly.
Hmm.
Yeah, it's a must.
Hmm.
And also the ability to close on a loan quickly. Let's say we get into escrow, the ability to get the underwriting, the appraisal, everything done quickly. What would you say is the fastest turnaround time that you guys have in BMO?
They published 23 days the other day, but I have a feeling that we have so much support staff right now and not a lot of loans coming through. That may change quickly because of the interest rate drops, but we're still sort of coming off of that lull of mid-October, November, December holiday time, and people are just getting into gear now. So I wouldn't be surprised if we could do it in like 18 days, which is a pretty quick turnaround. I don't think we'd need that long, but what I'd usually suggest that put on a give us a little bit of wiggle room on the contract.
Mhm.
Say 25 days, and I'll aim for 18. And if we happen to finish up and we're ready to go on day 16, I'll let everybody know, hey, we're ready to close early. Is this okay with the buyers? Is this okay with the sellers? I'll talk to Philip about it, and we'll find a good, appropriate timing for the closing. A lot of people like to just squeeze it in on a Thursday or a Friday. That way they get the keys and they can start moving in right away over the weekend.
Right, right. Okay, sounds good. We were going to talk about this cool restaurant and have a giveaway. I don't see anybody live in on the live stream right now.
I
I
don't see
think,
comments either. That's
yeah,
okay.
I think perhaps we we need to do a better job of promoting the event.
Mhm.
We let's postpone this drawing for the next event that we do, and we will do a better job of getting the word out in advance and getting organized, and then we'll have a good drawing.
Sounds like a plan to me.
All right. All right. So that's all we have for you today. Thank you so much, Jonathan. And
Well, thanks
yeah,
everybody.
All right. We will see everybody real soon. Thank you for attending, or thank you for watching.
Bye.
Bye.